Eric Muathe with Muathe.com with this weekend's market analysis video for the weekend of May 14th and May 15th, 2016. Let's take a look at markets here with about less than 2 hours to go. This is how markets are trading in the US. Dow is down the most, about 0.8%. And we can see here that crude oil is down 0.75. Gold is pretty much slightly positive. And so let's call it slightly down day. And let's go to the charts. To begin with, let's begin with the Nasdaq Weekly. And here we go back to one of the reasons why we were expecting, or at least we were looking for the opportunity here for the market to stall around here. It's because the market had come back to test the highs line on the Nasdaq Weekly. It's a simple line. We had drawn it like that, and you can see the market did respond to that line by showing double top resistance. So the pullback over the last couple of weeks makes sense and is consistent with that analysis. We also see that we had come back to test the break point, and that break point in sometime in June, July of 2015 was the high for the Nasdaq. So we've been drawing a line from there, and the market was coming back to test that same level, and of course we did see resistance. So the pullback over the last couple of weeks does make sense. Keep in mind there's also another line if you consider this break, and we know that that break was meaningful because of this move here that brought the market to the lows of February. So what we did is extend the same break line, and again we see that the market did hit that line twice, showing double top. So the pullback over the last couple of weeks can be explained by this Nasdaq weekly chart, and we can conclude from this weekly chart that until the Nasdaq can clear this line here, or until it can clear the top side RSI resistance line, as long as the Nasdaq is below the three lines, we have to assume that net there's a chance, or the odds are very high, that the market is setting up to move lower. If you take a look at the Nasdaq Daily, what we see here is that the market is coming back. Even as we trade at the lows right now for Friday, we can see that the market hasn't broken this RSI support line that goes back to the lows on the RSI of August, the lows of early January, and also the lows of February. So the market has already made contact with that line once before over the last week, and here it looks like it is coming back to test that blue line. So that's one potential layer of support the market could actually find. If you take a look at the daily, one can see that we are coming back also to test this line here, this RSI level. That was a nice entry here. So once the market moved above that RSI point, corresponds with this price movement, we have been trading well since then, pretty much well above that level. So we've been drawing a line right there, which I call the uniformity method, and again we haven't broken below this line. So those two lines do offer the market support on a day-to-day basis, and market bears would want to see the market break through those two lines if the market is truly gonna go lower. Otherwise, those who are bullish and want to see a bounce in the market can take heart from the fact that this line is holding, which is what you want to see, and secondly, the line connecting RSI lows continues to hold. So right there's an opportunity for the market to bounce or to break. If we take a look at the Dow Weekly, what I want to point out here is we are getting very close to that 50 level. So let's just be aware here that should the market slide further than the current price level and moving below RSI 50 on the weekly, could suggest that when and if it moves below 50, we might get a big down week. So just be aware as we go into an options expiration week, the Dow moving below 50 could suggest there's a possibility of a big down week around the corner. Just like we saw for the Nasdaq, the Dow is coming back to test this line here, which is the RSI lows line. We haven't broken through that, so we have to wait and see whether the market finds support on this line, or if the market breaks through that support, which would be bearish. Of course, a bounce on that line would be short-term supportive for the market, and also we are seeing the market coming back to test the line that should be support if it can hold, which is based on this RSI movement here that began this recovery of the lows of this year on a daily closing basis. So there's a line there that we haven't broken through. So if this line can hold, the green line and the blue line, if both of them hold, market should be okay for a bounce. Otherwise, movement below RSI levels that brings it below those two lines, that is when one can really expect a severe pullback. If you take a look at the Dow on an hourly chart, and here I'm using RSI setting of 26, so RSI setting of 26, just in case it looks a little bit different from your RSI setup. So we see here that the Dow is coming back to test the RSI lows line. We haven't broken through that, so the line connecting RSI lows is still showing that this could be potential support. Also, given that this was the lows here, the most recent lows, we can see that that movement in price corresponded with the RSI moving out of this range. So that movement was constructive and it led to a nice recovery since then. As you can see, nice recovery in the market here. So we can draw a line from that RSI movement, and you can see for now that we haven't broken through that green line also. So as long as those two lines are holding, even though the market seems to be making slight lows for the day and for the week, as long as the market holds those two lines, there's a chance that there could be a bounce territory. Keep in mind, obviously, because we have two well-defined lines, any break of that support potential there, any break of that is when we're going to see the true slide in the markets. On the S&P 500 weekly, we can see that a simple line connecting RSI lows has been the problem for the current market. And we can see we went above the line and back below it with uniform action, which is why this was a top. And also keep in mind that we had come back to test the RSI level. That was a break. So this break here in May of 2015 brought the market off those monthly closing highs, and we were expecting a pullback should the market struggle to move above that line, which is exactly what has happened over the last couple of months. You can see resistance on that red line for the highs there, resistance here for these highs, resistance here again for the highs right there. So until such a time that the market can move above those lines, this could easily be already giving us a sell signal short term, and so one can continue expecting a pullback based on weekly charts. Keep in mind, we're coming close here to RSI 50. Should we move below 50? Whenever we do move up below 50, so it's a big if and when the market moves below 50 on a weekly time frame, expect a big down week. The last time we had a big down week was when the S&P 500 dropped below 50, which was this period here between December and January of this year. Take a look at the 30-minute chart for the S&P 500, and we can see here that the market is still not yet below the support line. Going to the lows of February, there's a simple line connecting RSI lows. As long as the market is holding this line, one can continue expecting some type of a bounce. But should we break through those lines, or at least that one line, any break of that line is when we should expect the market to really drop. So for now, we are coming back to test that. If we see a break, then one can for sure know that there's more downside to be expected. Keep in mind that it also comes back to test the line that has been support, going back to the lows here. So let me draw that. So off the lows of February here, market's been bouncing on this green line for successful re-entry on a short-term basis. Every time we bounce on this line, the market tends to have a short-term recovery. And so for now, we are coming back to test that line. Market bears would like to see the market break through those two lines, while bulls would like the market to hold and to get enough energy after holding that level for a bounce. So in conclusion here, let's take a look at the S&P 500 on the monthly, and just want to show you a couple of observations here. If you take the monthly closing high there, monthly closing high, and this monthly closing high, there's a trend line here that is developing. So we can see that the market for now, until it can move above that trend line in price, one can expect that the monthly charts are suggesting to expect lower prices until the market moves above that line of resistance. Also take the RSI highs on the monthly and draw a line. There's some type of a trend line here, and again we see that until the market can clear this resistance here and move higher on the monthly RSI. Net, one has to assume that the monthly charts and the weekly charts are suggesting that over time, this market is poised to go lower. So we shall see. Otherwise, enjoy the rest of your weekend. For subscribers, be on the lookout for part 2 of this weekend's market analysis video. Eric Mwadith, Mwadith.com. As always, good luck, peace, and blessings. EACS. Woo!